the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we explore the stories behind key banking sector developments. It is the 7th of December 2023. I'm Swapnil Joglekar, and this is what we have lined up for you today. First up, a cover story will discuss what to expect from the RBI's MPC meet. Later in the show, I also posed this question to our consulting editor, Tamal Bandyopadhyay, for his take in our Expert Take segment. In Banker's View, Tarun Shug, MD and CEO of Bajaj Allianz Life Insurance, talks about the insurance regulator's goal of insurance for all by 2047 and how ready the industry is. In Banking for You, we'll tell you what AID is. At the show's end, we share the results of last week's poll and the question for this week. All this in today's edition of the Business Standard Banking Show. The RBI's Monetary Policy Committee is meeting in Mumbai to decide the course of action. Will the policy rate change or will it change its stance? What are the expectations? Anjali Kumari and Bashir Kumar asked the experts ahead of the D-Day.
The 6-member Monetary Policy Committee of the Reserve Bank of India is expected to keep the policy repo rate unchanged for the 5th consecutive policy review on December 8. This is what all 10 respondents said in a Business Standard poll. After increasing the repo rate by 250 basis points to 6.5% between May 2022 and February 2023, the MPC hit the pause in the April review of monetary policy. The respondents include the State Bank of India, Bank of Baroda, CRISIL, HDFC Bank, and ICRA, among others. All except one respondent said they don't expect the RBI to change its stance to neutral. The other respondents expect the committee members to maintain the withdrawal of accommodation stance because the upside risk to inflation remains. While all other respondents don't expect the RBI to revise the FY24 inflation forecast, PNB expects it will lower this by 20 basis points. When it comes to FY24 growth forecast, all respondents, except Yes Bank and ICRA, expect the RBI to revise it slightly upwards.
The RBI may be very confident now to not change the repo rate because in case growth was weaker, there could have been some pressure that you may have to lower the repo rate. Now they have to then concentrate on the inflation number, which I think will probably be higher in the month of November compared to the 4.95% we had in the last 2 months. So therefore, it would be a status quo being taken on the repo rate. The stance also may remain unchanged, primarily because of the fact that RBI had lamented that the transmission had not happened fully post the 250 basis points hike in the repo rate. That hasn't been completed even in the last 2 months. That is since the RBI made its statement in the month of October. So therefore, I think it would be a continuation of the existing policy rate as well as stance.
IDFC First Bank economist Gaura Sengupta said that with inflation still being above target levels and growth holding up, the focus would remain on ensuring that inflation goes towards the 4% target. Sengupta added that the monetary policy is inclined to keep liquidity conditions tight, which they have achieved. HDFC Bank principal economist Sakshi Gupta said the RBI will continue with its stance because inflationary risks continue to linger while growth remains strong. Thus, added Gupta, the RBI has the headroom to keep monetary policy tight as of now. However, PNB Gilt's MD and CEO Vikas Goyal said there is a chance of a shift in stance, considering the actions taken by the US Federal Reserve so far. Even though Fed Chair Jerome Powell left the door open for further hikes in rates, the markets say the US rate setting panel might be done with rate hikes. India's Consumer Price Index inflation rate fell to 4.87% in October, marking the lowest figure since June. Despite this overall decline, the food price index exhibited a sequential increase in October, breaking a 2-month downward trend. Within the food category, the vegetable price index rose 3.4% month-on-month, primarily driven by a 15.5% sequential surge in onion prices. According to the RBI's State of the Economy report, food inflation poses the sole threat to the central bank's commitment to align headline inflation with the 4% target. The report said the central bank was preparing for an anticipated uptick in the inflation readings for November and December.
So the banking sector will keep an eye on Friday's outcome, and so will we. What about the insurance players? My colleague Manojit Saha caught up with Tarun Chugh, MD and CEO of Bajaj Allianz Life Insurance, to talk about insurance and more. Here's the chat.
Hello and welcome to the Business Standard Banking Show. The insurance regulator has taken a host of initiatives for the development of the sector in the last 1 year or so. One of them is Insurance for All by 2047. The idea is to increase penetration. How are the insurance companies prepared to take up the challenges? Also, some of the insurance companies are facing some challenges in terms of growth in the new business premium in the current financial year. How are they addressing it? To discuss some of these issues, we have today Tarun Chugh, MD and CEO Bajaj Allianz Life Insurance Company. Bajaj Allianz Life Insurance is one of the leading life insurance companies in the country. So, Mr. Chugh, welcome to the show.
Hi, Manojit. How are you doing?
Thank you. I'm fine, sir. Thank you. So, let me start with asking you on the regulatory initiatives that has been taken by the insurance regulator. So, how do you think insurance companies are prepared to take up the challenge of increasing penetration and insurance for all by 2047?
I think, Manojit, this is a very good situation to be in, where the regulator itself is looking at the developmental side of the insurance business, because insurance by itself is a very tough product to sell. Hence, the more ease you can have for the customer and the more push you can have from the regulator, we would also always, of course, request the government to give us some tax benefits, of course, to make it a little bit more easier. But notwithstanding that, with the regulator pressure and regulator push, it really helps. So regulators working largely on 2 or 3 large, significant fronts. One is on ease of doing business, where in multiple facets, they're looking at technology and process, easing. So, for example, Bima Sugam is something they are talking about, where they can provide a marketplace like we have in the loan segment today, like we have in consumer goods today. Similarly, in life insurance, it will be one of its kind in the world, first of its kind, actually. Plus, it is looking at various tech stacks which exist, like Aadhaar is a big tech stack, and then you have the banking stack coming in place, how we can integrate there. It is looking at integrating various providers of service, including making a demat equivalent account for life insurance. So like today, you can buy a mutual fund by just one tick. So today, can you buy insurance? No, it's a very difficult process. So that is another direction they're going at. And similarly, getting all distributors, manufacturers, provide product comparisons, all of this in one location. I think that's holistically Bima Sugam and the other things that they're moving on. They recently moved into a use and file methodology for a lot of product segments, which makes it easier for us to respond to the customer needs. Because India is not one India. I always believe India is like 6, 7, 8 Indias.
Correct.
And as those customer needs are evolving, it helps us, test a product and start using it before we file it.
Right.
Which was the other way, which was file and use earlier, and hence it is given more agility to the sector itself. On the granular bits, the regulator is working a lot closer to the ground, where it is assisting us and in fact leading the process of reaching out to various state governments and looking at state insurance plans, where we can work with state government machineries and push the agenda of the state as well. But at the same time, on the ground level, cover people with simple products, which are, multifaceted. It's not just insurance, life insurance, but life insurance, house insurance, credit insurance, all of these, all bundled into one.
So Bima Vahak and Bima Vistar are these other two significant moves that are happening.
Right.
Similarly, grievance settlement, how you can easily reach out to the regulator if you're a customer, if you're uncomfortable. All of these processes are getting streamlined. I think it's a significant push.
Overall, what kind of new business premium growth you're projecting for the current financial year?
See, being a listed company or owned by a listed company, I can't talk about projections. But what I always maintain is that we'll at least be 2 times the growth of the sector. And the sector is expected to grow faster than the GDP growth. Hence, you can do the maths.
Right. And what are the strategies you have in place, to push growth in the last 5 months of the current financial year? Is it going to be more on the agency side, the focus on the distribution side, or the product side? If you can throw some light on this.
No, very good question. So, see, after March of last year, when it was a phenomenal increase, because largely because of the tax breaks that were going away from April.
Yeah. I will come to that also. Yes.
Yeah, 5 lakh. So it was important for us to keep our agents a little excited because they'd already sold a lot of insurance. We hence broadened our width of products which we had. Plus, we got into hyper action in terms of launching newer propositions for customers and for agents to take to the customers. For example, we have a very significant launches that have happened around different kind of mid-cap to small-cap focused ULIP schemes. We've had launches around specific segments like diabetic term plan. We've looked at different kind of term plans, more pension plans, and more variants within each of these. So all of that, the product launches have really helped us. That's one of the key factors. But it's normally never one. There are always multiple things that work, Manojit. So this is one thing that has worked. Second is, you're right, our focus on agency has really helped. So now among the private companies, we are one of the largest agencies in the country and the fastest growing as well. Our bank assurance channel has been doing very well because we've been only adding more and more bank partners. So we've added 4 more bank partners within this quarter itself.
Right.
So that is also helping. So width of distribution is going up. The other is we've always invested in the growth of India, and we are therefore setting up more branches in more tertiary towns, like tier 2 and tier 3 towns. Going forward, that is where the growth will come.
With this, Mr. Chug, it was a pleasure talking to you. Thank you for speaking to Business Standard.
Thank you. Thank you so much, Manojit. Always good to talk to you.
So the insurer has several strategies up its sleeve to boost new business premiums. But what happens when a financial institution's business is not doing too well? In the past, the central bank has superseded boards and imposed all-inclusive directions, or AID. But what's that? Kasturi Akhil explains.
On the 24th of November, the Reserve Bank of India superseded the board of Abhyudaya Cooperative Bank due to governance issues and appointed Satya Prakash Pathak, former Chief General Manager of State Bank of India, as administrator to manage the affairs of the bank for a period of 12 months. This was the first time that the central bank superseded a bank's board without imposing any business restrictions or an all-inclusive direction, that is AID in RBI parlance. The Apex Bank imposes the all-inclusive directions under Section 35A of the Banking Regulation Act 1949, which empowers the RBI to take action to prevent the affairs of any banking company from being conducted in a manner detrimental to the interests of the depositors or in a manner prejudicial to the interests of the bank. Under the Act, the RBI can also impose restrictions on banks like a cap on deposit withdrawals to ensure better governance and control. In September 2019, the Punjab and Maharashtra Cooperative Bank was placed under all-inclusive directions due to major financial irregularities, failure of internal control and systems, and misreporting of its exposures under various surveillance reports to the RBI. As a result, depositors were only allowed to withdraw up to 1,000 rupees of the total balance in every savings bank account, current account, or any other deposit account. The bank was also not allowed to either grant or renew any loans and advances, make any investment, incur any liability, accept fresh deposits, enter into any compromise or arrangement, and sell, transfer, or otherwise dispose of any of its properties or assets except as notified in the RBI directions for a period of 6 months from the close of the bank's business on September 23, 2019. In 2020, the central bank had superseded the board of directors of Yes Bank for 30 days, owing to serious deterioration in the bank's financial position due to bad loans. The Reserve Bank imposed a moratorium on Yes Bank and capped withdrawals at 50,000 rupees per depositor till April 3. The moratorium was later lifted by March 18. In the case of Abhyudaya Bank, the RBI did not impose any restrictions on its business because the lender had a statutory liquidity ratio much higher than mandated. This means the bank can easily liquidate its excess SLR holdings if any depositors come to the bank to withdraw money. According to norms, once a lender is put under AID, the deposit insurance cover provided by Deposit Insurance and Credit Guarantee Corporation kicks in within 90 days. The Deposit Insurance and Credit Guarantee Corporation, or DICGC, a wholly owned subsidiary of the Reserve Bank of India, provides insurance for bank deposits such as savings, fixed, current, and recurring deposits. In September 2021, the corporation announced it would pay up to 5 lakh rupees within 90 days to depositors of 21 urban cooperative banks, including the scam-hit Punjab and Maharashtra Bank, that the RBI had placed under its all-inclusive directions or AID, which included restrictions on withdrawal of deposits.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
This Friday, we'll get to know what Mint Road's rate setters have in store for us. We heard a few experts earlier in the show. I asked our banking expert Tamal Bandopadhyay for his take on this and more. Here's the conversation. Hello and welcome to the show, Tamal. Now, what will RBI's rate setters decide? We'll get to know that tomorrow. But you don't expect them to change either the policy rate or the stance. That's what you wrote in this week's column. Why is that so?
Well, Sapnil, let me play the Sherlock Holmes. It's elementary, Watson, because inflation has been going down. If you see, talking about the last month, I'm not bothering you with the numbers, but it's going down. But in November, it will go up and substantial. It could be closer to 6%. And December also, it will be on a higher level, even though lesser than November. And as you know, I mean, we can blame it on onion and potato. Food inflation is a big worry. But the positive thing is the core inflation, the non-food, non-oil inflation, RBI has been able to manage it, to bring down. But Reserve Bank of India governor, as we have seen, I mean, for him, there is no room for complacency unless the battle against inflation is over. So I would like to believe we are in the last mile or last lap of fighting inflation. It will be high till the fiscal year end and in accordance with the Reserve Bank of India's projections or estimate. And till we get this inflation within 4% on a durable basis, don't expect any rate cut. Don't expect even a pivot. Pivot is basically neutral stance. So it will continue to be a pause. maybe not as hawkish as the October policy was. Liquidity will continue to be in focus. As we speak, liquidity has been positive after quite some time because of government spending is it's happening now. Elections are over, government is spending, so liquidity has been back. So I think RBI will not take its eyes off from containing inflation, managing liquidity. So I don't expect any change in the stance. Neither do I expect any policy tinkering with the policy rate.
So if this Friday is about RBI's MPC meeting, last Friday was about RBI's agreement with Bank of England, and this was on the CCIL issue. I have to ask you, what would have happened if they hadn't reached that settlement?
No, you see, the key term is cooperation and exchange of information. Which are the parties between Reserve Bank of India and Bank of England? Now, what is it on? It's on CCIL, okay, Clearing Corporation of India, which is a central counterparty to clear settlements of all transactions. It's a government securities transaction, foreign exchange transactions, money market transactions. CCIL is the same. Now, what is the background? Last October, 2022 October, I'm talking about, the Eurozone's financial markets regulator, which is called ESMA, European Securities and Markets Authority, they withdrew recognition of CCIL and 5 other CCPs, the central counterparty. And that created a problem. I think CCIL in January applied to Bank of England as a third-party CCP. Meaning outside the Eurozone regulator, whether it can be done. In June, UK Treasury sort of, I would say, endorsed the concept of third-party CCP, etc. So now the MOU actually will ensure cross-border cooperation. What was the bone of contention? The European authority, they wanted to take a look at the regulations and how the functions of CCIL and other CCPs. Reserve Bank of India said, look, I mean, these are all well regulated. Our regulations and supervision is pretty good. I mean, who are you, ISMA, to get into this? That was the issue. Now this cooperation, I think is a forerunner of CCIL getting the status of as a sort of third-party CCP and carrying on the business with the UK geography. Now, what will be the, in plain terms, what will be the UK-based, the UK headquarter banks which are operating in India, like for instance Barclays or Standard Chartered, etc. Now, for them, clearing and settlement, etc., for their customers will be pretty smooth once this CCIL thing is over. And if you remember, not only the European regulator for this, even the French authorities also had certain issues. I think they also said that they would not get into this. And then I guess it's an 18 months we have got a sort of, I would say the 18-month breather for that kind of stuff.
And I want to have your thoughts on this about attrition. At the data here from TeamLease, the staff churn is at 34% for HDFC Bank. It's at 35% for Axis. And TeamLease said in a report that it expects staff churn to remain high in the financial sector. What's happening there?
Well, it has only spoken about 2 banks. You are talking about 2 banks. I am aware of at least one more private banks which is even higher, and in 40s. I want. Now this is a phenomenon. It's not recent, but it's not exactly recent. It's been happening for the past couple of years. And if you ask me, hand on heart, in private, all the CEOs, particularly I'm talking about the private bank CEOs, they say that the biggest challenge before them is keeping the staff. So it's a very difficult thing, because this is a new public sector banks are not affected this way because their structure is very different. People typically seek security under the umbrella of public sector banks. Most of them, majority of them. Of course, there are some guys who get frustrated and leave for reasons or for improvement in their career. But private banks is a different ballgame altogether. Now the young guys, you call it different generation kind of, the Zingis and the new generation people, that they are impatient. They want to take challenge, and they are always looking for that, to do something else.
Right. So next gen challenges need next gen solutions is what you're saying. And of course, we'll keep our eyes on tomorrow's MPC outcome. Thank you so much for joining us, Tamal. See you next week.
Thank you.
So Tamal expects no change in RBI's policy rate or stance. But do you expect the RBI to reduce the repo rate? That's what we asked you last week. 59% of you do, while 41% say no. Here's our question for this week. Has RBI's actions made your personal loan more expensive? Our poll is open from today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We'll be back next week with more news, views, and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.